Good afternoon, everyone. It's Matthew McCoro here with our special event. We're going to be breaking down the financial markets as promised, and my goal here, as I'll be sharing in more detail, is to truly empower today. It's been a great last few months into the market here, and I love sharing the various ways that we can capitalize on the different market movements, be it bullish, be it bearish, take advantage of the various swings out there. So at this point, I'm going to share my camera like I always do. But before I do that, let's just make sure that everything is working properly, and then I'll roll in the webcam as well. But let's just make sure all the initial audio and video sharing is working. So at this point, you should be able to see a slide that says sound check, and then you should be able to hear me clearly. If that is the case, please be so kind and just let me know in the question section. It is private. We do that intentionally just to ensure that everything stays above par as far as any private information that you may share. This is not a round table or town hall event where everyone's going to be talking over each other. So I'm in sole control of the microphone, and of course, any of your private information you share will maintain dialogue between you and us here at Concordia Financial Exchange. So it's instant, so I'll see your responses come through. So appreciate it, Dr. Bob. Thank you. Simon, I've got Keller. Chatlani's here. Thank you. Thank you, Raymond. All right, perfect. So let's now get the webcam also going live here. All right, so at this point, you should now be able to see me on the camera. So it's a pleasure. You can put a face to the voice as we begin here. So rest at ease. Any question's a great question. I'm gonna do my very best to ensure that I keep everything as simple and straightforward as possible. Some of the concepts initially may feel over your head. If you have that feeling at all at any point, just let me know. This question section is here so I can have an open dialogue with you and make sure that I jump in and restate a concept if needed. One of the benefits of being in this industry for 15 years is I've picked up many different analogies, different ways to explain a particular topic. So I can say with the utmost confidence that I can surely find a way to explain a concept. All right, so based on the feedback here, and it looks like we have lots of you that are active participants. Some of you look like you're at this stage being passive, which is fine. Hopefully by the end of this event, you can feel free to enjoy the open dialogue that we have and jump in and conversate with us. So my name is Matthew McCoro. Many of you have seen me before in an event like this. We have a great partnership with the group here that's hosting this event with us. But I've been in the industry since 2007, which is interesting because of the current financial market conditions. It feels like I'm all the way back to where I started again. For those that obviously remember the 08, 09 recession, that's where I learned my chops of trading the financial markets. And so it's been a long time since we've been in a condition such as we are now, but ultimately I definitely have a wide range of experience that I'm going to be showcasing with you and teaching you today. Now, I believe in the concept of momentum trading, so heavily based on technicals, backed up with simple indicators to help us understand when we're seeing key breakouts, trend reversal points, and I'm going to be sharing all of that with you in 100% detail, full transparency, nothing disguised behind password protected indicators or systems, anything of the sort. I promise you that in the copy and the email invitation I sent to you, and I'm here to live up to that promise with you. And so the ultimate goal here is to be simple and be repeatable. I'm also going to be sharing my checklists. So 2 of my 4 most often used trading checklists with you. And at any point, if you want to clip them or take a screenshot, feel free to do so. My goal here is to empower and teach. All right, so to take pictures, if you haven't known, if you're in GoToWebinar and if you're in full screen, you have to get out of the full screen mode. Okay, so if you're off of the full screen mode, on the top of your viewing window is a camera button. So that camera button allows you to actually take a screenshot. So whatever is on the screen that I'm sharing, you can actually snag it and save it to your desktop. All right, so it's a great way for you to pull whatever information you'd like to pull from today's event. All right, so with that, let's go through the biggest housekeeping item that we must cover. If you've been in any financial webinar event or on-site event like this, then you've seen this type of disclosure before. It's my responsibility to tell you that trading in the financial markets carries risk. That means you can lose. You can lose your money, you can lose a trade, you can in fact lose all that you have in your trading account. Something I must cover, but I'm on the firm belief that we're all adults and we're making important choices for us individually based on our personality, our equity management, and of course our risk capital, right? Money that we have set aside to invest with. So now that that's over, what I want to do is talk about the focus. We're going to focus once again on simple and repeatable steps to trading. I'm going to be spending the large majority of today's event on charting software. Okay, I'll explain and I'll let you know who I use and what I use here in a second, but primarily the large portion of today will be on charts. I don't like to spend a lot of time on PowerPoints. I think there's a purpose to them. There's definitely nothing wrong with using heavy slides in an event like this, but I think it's better to be on the actual charts talking about specific opportunities that just happened versus going back and looking at opportunities that were months and months and months ago. I don't know. That's just something I've picked up throughout my years. The goal is to empower. I want to be able to teach you so at the minimum you walk away with a different way of looking at the markets, some more tools that can help you lower the anxiety that many traders feel when there's a sense of unknown. There are no absolutes in trading. There's no absolutes in life. There's no absolutes in love. There's no absolutes when it comes down to trading and forecasting, because that's what all of us traders are trying to do, is forecast what's going to happen next. So the tools I'm going to share with you is all about putting you in a position where you can pull up a chart, pull up any type of chart that you want, and have a clear understanding of what's happening. Not only what is happening in this moment, but what happening now is going to give us the forecast for the immediate future, the near future, not years out in advance, but I'm talking about over the next couple days, next couple weeks. That way we always have a steady track and an understanding of what is on the horizon. Is it going to go up? Is the market going down? Is the market going to go sideways? Is this actually the bottom? Is it not the bottom, right? Those are common questions that me and my clients are managing every single time we pull up a chart. And so these tools, because we're talking about the financial market, are designed to help you make money, right? So I want to give you tools, help you understand how to use them, and then ultimately give you an opportunity to make money with them, right? That's how this event is going to go today. So as we get into the charts here, I want to let you know that I'm using TradingView. So TradingView is my preferred charting software. And if you don't have charts and you want charts, then let me know and I'll get you out a resource so you can take advantage of a free trial. It's not even a trial really. I mean, I've got traders that don't want to pay for any charts, and so they just use the free version. So if you go to Matts, M-A-T-T-S, charts.com, it'll take you to the TradingView page and you can sign up for free. There are paid versions, of course, but anything I give you today does not require you to have a paid version. But I'm not TradingView. I am an affiliate of TradingView because I've used them for years. And in class, we use this all the time for sharing watch lists and sharing different charts and analysis to help facilitate success in the markets. And so that's why I wanted to let you know who we use, just so in case you want to try out a new software, this is a great tool. All right, so with that, let's jump over now and let's start breaking down some of the keys to what we're teaching today. The whole goal of today is, once again, to pull up any chart at any time and have a thorough understanding of what just happened, what's about to happen, and then what's going to happen in the near term. All right, that's going to be the ultimate goal here. So to do so, we're going to start off with looking at the S&P 500. It's the SPY, SPY. And for those that are unfamiliar with it, it is one of the largest, most active traded symbols or instruments in the financial markets. How many of you are familiar with ETFs and what they do? Exchange traded funds. Type in a yes in that question section if you understand what ETFs are, how they work, so that way I can gauge how deep I need to go. The benefit of this being, of me being with you here, is I can tailor this event to you in the room, right? That's the benefit of that. All right, so it looks like we have several of you, actually a large majority, say yes. We do have some that are saying not exactly. Simon says no. Okay, perfect. All right, well, seeming that we do have, looks like about 30% of you are just not quite sure or just don't have the full breadth of knowledge about them. Let me give you a quick walkthrough of what an exchange traded fund is versus a typical stock symbol like Apple or Microsoft. Now, an ETF is an exchange traded fund. It's very similar in concept to like a 401k or even an IRA, retirement account. It's this similar in the sense that you've got a particular instrument. In this example, it's the S&P 500 ETF, which is an exchange traded fund. Now there's many of them. There's about 2,000, maybe 2,500. Could be up to 3,000 these days, right? But there's at least 2,000 of these exchange traded funds. And so this one in particular on the screen here is basically a fund that has its own assets that people actually invest. People buy and sell the S&P 500 using the SPY. And so what it is it's a collective representation of the stocks that make up the holdings of this ETF. So for example, if we go to something like the NASDAQ, okay, so the NASDAQ, which is also one of the most popular exchange traded funds, it's known as the QQQ. The NASDAQ 100 is what this is based upon, is made up of stocks. Okay, so people invest in the NASDAQ, and then the fund managers of the NASDAQ 100, the Qs, then allocate money in different types of stocks. So the top 10 holdings currently of the NASDAQ is Apple, Microsoft, Amazon, Tesla, both alphabets, the Googles, NVIDIA, Meta, or Facebook as we may remember them as, Pepsi, and then you've got Costco. So these are just the top 10. The top 10 that I just listed to you make up over 50% of all of the assets managed by the QQQ ETF. And so the NASDAQ or the Qs here is not solely priced. It's not independently priced intrinsically on its value. The performance of it is based on the stocks that are allocated or invested in by the overall fund. So NASDAQ could have, I can't remember the latest number, but let's say it's $3 billion invested in the NASDAQ, the Qs. Well, then they take that 3 billion and based on that fund's investment strategy, they'll then spread that money out. Some spread them out evenly, like the S&P 500 is an equal weight distribution, meaning all of the different holdings are equally weighted in investment, right? The NASDAQ is not. 10 stocks make up over half of the assets invested by the NASDAQ 100, okay? That's the simplistic way to look at it. The other side and how we use it here in my club is we use them to understand at a 10,000 foot view where opportunities are. So if the NASDAQ goes bearish, if this chart goes bearish, then there's a high percentage probability that these top 10 stocks are going bearish, right? So just remember, the NASDAQ is not independent. It's actually just a summary of the performance of the stocks that it's invested in. That's some of the simplest ways to think about an exchange traded fund. And there's many of them, as mentioned. Think about energy stocks, think about technology stocks, think about finance stocks, utility stocks, consumer staple stocks. Those are different sectors of the financial markets. There's ETFs solely focused on those specific areas of the market. So there's many ways that I love to use ETFs. You can also trade them. You can trade options on them if they're optionable. You can buy and sell them outright. So it's a way for you to then basically hedge your position. So rather than try to pick 1, 2, or 3 stocks, you can say, okay, I want to invest in many stocks at once. Well, to do that, you can also trade the ETF. So hopefully that made sense. For those that were unsure, does this make sense to you? Type in a yes, or give me a some type of notification that it now is a little bit more clear, because they're very valuable, and we use them. And I'll share some with that if we have time, of how to really fine tune your stock picking without having to look at hundreds and thousands of stocks. We can actually look at a handful of ETFs and find out what's happening very quickly. Okay, good. So it looks like that was super helpful. All right. So let's come back here, because I want to go back to the S&P 500, the SPY here. It's SPY. I mean, people trade futures off this too. I mean, there's many ways to trade this type of instrument. So the big talk of the town here as of late, if any of you watch any talking head shows, is how and what is happening with the markets. Now, this is the high back in January. This was our recent low. So far, it's our low. This is the 21st of June. Now I'm on a daily chart. Okay, I'm not going to really drill down anything smaller than a daily chart today. The way I teach is, and the method I teach can be applied on any time frame, can be applied on ETFs like we're doing now, could be applied and is applied often on individual stocks. It's also applied in Forex and futures trading, crypto trading, all sorts of different markets. My strategy deploys on it, and that way you don't have to learn many ways to trade. You can learn one method, and the only difference is what you're looking at and how you trade it. But initially, everyone's question on their minds now is this the bottom? Did we achieve the bottom, and are we in an active recovery? Depending on who you listen to when it comes to commentary, could be videos, could be some of the major financial news sites out there, you're going to get a wide variety and a wide range of opinions. And that becomes hard for many people to weed through it all. And so what I'm going to share with you is an objective approach to look at data. We're going to be looking at data to try to remove as much of the subjectiveness as possible. Basically, feelings, hopes, and dreams. Though we all have them, my goal is to try to eliminate and alleviate a lot of that from our decision making. So when it comes to looking at a chart, the magic question that we must ask is the price trending up or is it trending down? Now, I'm going to share with you my setup. I've already seen some questions about the 200-day moving average. And the comment is, for Keller, where's 200-day moving average? Not important as resistance. Now that is important, and I'm going to share with you the different setups that I use, but I do look at the 200-day, and you're going to see it here in a second too. So when it comes down to this trend, what I like to deploy are moving averages. Now you can use weighted moving averages if you like. You can use exponential weighting averages if you choose to. But for me, I want to keep things as simple as possible. And so I just use very simple indicators that are available on almost every charting software that I've ever come across in my 15 years of experience. Part of my early exposure to the financial markets was due to my role as the chief revenue officer for one of the largest financial education and trading technology companies at the time. And so part of that role was generating revenue. And to generate revenue in this market, from our standpoint at the time, was to create product. Well, to create product and to make sure that you have good product is you've got to know how to trade the markets. And so that was a huge benefit to me personally, is being paid to learn how to trade. I spent over 10 years learning the craft, and in my selfless opinion here and humble opinion, becoming a master chartist on manual analysis. But the difficulty with trading manually, meaning manually plotting your trend lines, is that it's time intensive, It is extremely subjective. And so rather than deal with that, what I found is to just deploy some simple tools and techniques. And the first set I'm going to give you all is our indicator set. We use 3 at a time. This first setup here, and I'm going to give you the other 2 I use, is a 10, 20, 50 model. Now, if you're not familiar with moving averages, I'll give you a brief walkthrough here in a second. But what they are is a mathematical calculation based on price. And so you then customize the amount of time or the amount of bars used to calculate the trend line. So I'm going to go one by one here and just explain this. So on the screen now, you see candlesticks. Those represent the open, high, low, and close of a particular time frame. I'm on a daily, okay? So all of these candlesticks are giving us the high price, low price, open price, close price of the S&P 500, the SPY, on a given day. It's not enough to really understand is the price going up or down. So what we do is we deploy these trend lines. So these moving averages are giving us a trend. So if we look at this 10-day, that's the smallest time frame I use is at 10. So that means every 10 days back, so from today plus 9 days back, we're taking the close price, dividing it by 10, getting an average price. So if we take a look at the last couple days here, the close price here was 412.35. You can see the date on the bottom. So this is 412.35. The 10-day average price has been $422.80. So we are now below the 10-day average. So from a trend perspective, a 10-day trend, are we bullish or bearish? Are we in a downtrend against that 10-day, or are we in an uptrend? You don't have to answer it if you don't want to, but it's a downtrend, right? The price is lower than the 10-day average trading activity, okay? When it's above, that means we're trending up versus the 10-day average. So if I scroll out, you can see as the bars are rallying up, we're making higher prices, we're staying above the 10-day, right? And then you cross below, we start going bearish, you cross above, you go bullish, right? So it's a way for us to get a mathematical calculation. Earlier today on Charles Payne, if you know that show, it's at 2 o'clock Eastern on Fox Business. I like Charles Payne, I like his commentary. He brings on different experts, and today they were talking about the use of moving averages. And the guest they had on, she was a female, she stated that the reason to use moving averages is that it helps to clear out the noise. The noise she referenced was all of the bars going up and down. So by using averages, it helps to smooth out different cross points, different times where you see inflections in the market to better understand a larger perspective on the market. So, but that's not enough. That's just one perspective. The 10 is just a immediate, very close time frame. So what we do is we deploy multiple time frames to give us a sense of what's happening on the short term, what's happening on the midterm, and what's happening on the long-term perspective. Okay, so we have basically 3 confirmations if we're trending up or trending down. So when I turn on the yellow, and I'm going to get rid of the bars here, okay, I'm going to get rid of the candlesticks. So now I've turned on the yellow trend line, which is the 20-day moving average. So you can see when you have crosses, that's where it really helps to decipher what's happening. So all of these little crosses here, when the blue line, which is the 10, crosses below the 20, you see how that trend dramatically changes, okay? Those are points of reversals. When the market's going up, and then it goes down. We want to be able to see that, okay, in a very simplistic manner. At least I like to do it. Keep things as simple as possible. I don't want to have to sit here and draw all over the charts trying to figure this out all the time. I want something quick to pull up exactly what's happening at any particular time. So now that I can see a price move. The 10 is now crossing below the 20. Okay, I've now got to think, now we've got two confirmations that the market and the price is going down. Now, turning on the 50-day, you can see how much more smooth the 50-day is. It's not as erratic up and down because it's looking at a larger basket of time. It's looking at 50 days versus looking at 10. So every day that goes by, it resets that moving average, meaning it's going to take what's happening now going back 10 days, 20 days, or 50 days. So it's picking up those movements. Now, if I'm looking at a large range like 50 days, one day is not going to be a big shift to that average, right? Instead of taking just 10, dividing it by 10 and getting an average price, now I'm getting 50 different time frames, right? 50 days worth of data, then calculating. So 1 day, 2 days, even 3 days does not give a big erratic price jump on the average. Okay, so the reason I use these three is due to time in trade, or another way to frame it is length of swing. Okay, so this type of setup here, this 10, 20, 50 is for holding times, meaning if I'm going to get into a trade, this is a holding period. So my expectation of how long I'll be in the trade is days and weeks. So this is not a long-term setup. This is not if you're looking to buy and hold for months and months, quarters and quarters, and years, you would not use a setup like this model. This is what I call the trading model. So more actively involved in the market. 10, 20, 50 is primarily used because I want to find swing trades. I want to be able to find trades that last days and weeks. I'm not interested in looking at years. I love it, Van. You are not deplorable. I know you. I know you to the deepest parts of my soul. You're good to go, buddy. I love the comment though, okay? Now, I had a comment about the 200-day. The 200-day is very important. 200-day moving average. In fact, let me share this with you so you can take a screenshot if you'd like. Okay, so if you want to take a screenshot, these are the 3 different setups that I use on the charts. The beauty of trading views, you can set up templates, so you don't have to customize and set these up all the time. The trader model is what I shared with you now. It's a 10, 20, 50 moving average. The investor model is more the long term. Okay, it's a 50, 100, 200. And then what I call the master setup is all 5 of the different indicators together. So it's a 10, 20, 50, 100, 200. Now, you need to have a paid account for TradingView if you're going to use TradingView. You need to have a paid account to use the master setup, okay? But the trader setup and the investor model you can use for free on TradingView. So take a screenshot, let me know when you're good to go, and then we'll move on and I'll show them on the charts for you. All right, so it looks like, all right, everyone's got it. Okay, so remember, these are time frame specific. You want to go long term, investor setup. Short term, more active, not scalp. You could scalp here, but you're going to use a different time frame. But on a daily chart, all daily charts being equal here, investor setups, you're thinking months out into the future. Trader setup, days and weeks. Okay, but same concept of how we look at them. So before I deploy the longer term here, what is the trend? What is the, let's think about this in long term, short term, midterm. Okay, 50 is the long term. What's the long term trend of the SPY? Is it up or down? What is the long term trend of the SPY right now? Type in up or type in down? Don't type in sideways yet. Okay, that's for another part. That's right, it's up. Okay, why is it up? Because the price is above the 50-day. This is where traders get in trouble. One of the biggest hurdles for traders, and to give you an idea, in my career, I've sold over 150, it's probably $170 million worth of products. So not only was I responsible for revenue for over a decade, it was also customer service and support, all fell under my purview. So combining the strategy of developing traders, product level, and then supporting those clients, I saw all of the issues that traders face. And the biggest issue is always stemmed down to direction. People buying in early, people buying in late, people buying and they should be selling, okay? That's directional issues. And a lot of that is due to the method of finding trend. And so rather than sit here and try to draw all day long, number one, it's extremely time intensive. And then following up again, it is extremely subjective. And so this mathematical use of these averages here is the same no matter what we look at. So if we look at the 10 and 20, we're below it now. Okay, so on the short term and midterm, we are now running in a downtrend, meaning the price has now broken down below the 10 and 20. So we're right in between. We have two resistance levels above us in trend. We have one support level below on trend. I'm not talking about horizontal left to right. I'm talking about what in actuality these trend lines give us is support and resistance. Okay, so when we're above these trend lines, that means these trend lines are giving us support. They're holding up price. When we're below, like we've been the majority of the year, below these trend lines, that means we're under resistance. Price is being held down by the trend. The trend is being pushed down, held down, resisted, okay? So I'm gonna flash through some charts here. I'm gonna flash through fairly quickly, and I want you to all be able to tell me up or down and where it's gonna go, and we're gonna stick to just the long-term trend, okay? I want you to start just visually picking them up. Some of these have extra analysis on them, doesn't matter. I want you to focus on where's the price in relation to trend. No, hey, Hung, good to see you, buddy. He says, hi, coach. Yep. Okay, look at these charts. Are we above or below? Okay, we're right on it with Nordstrom's. It's still above it. Don't be subjective. It's either above or below. I'm going to tell you the different tools to recognize. These are not, I'm not saying buy these now. I'm saying, is the price above the trend or not? Or is it below? Okay, that's the first step. These are just random stocks in my watch list that we've traded throughout the years. Okay, what I want you to pick up is look how quickly you're able to pull up and see. American Airlines just went below. Okay, that's important. These are things that we start talking about, crosses and reversal points, right? We want to find reversal points. I'm going to show you what those mean. Look at Marathon Oil. Oil's breaking out. Talked about this last night in the class. Hung was there. He can verify that. I said, watch out for energy. If it goes, you're going to see the energy take off, and it's at the point of going, right? So you're seeing energy go today. Look at Delta. Delta's coming down to the 50, right? Everything's coming down, but it's still holding above. ATI, that's in steel company, right? So as you can tell, the speed in which you're seeing this is what I'm after. Because the less time it takes you to evaluate and understand, are we going up or down, means that we're being objective. We're not sitting here trying to overthink it. We're just going purely on data. Data-driven thinking. Now, I'm not going to remove all of it because then it wouldn't be fun. Okay, so there's going to be some emotions, of course. But this concept, as I deploy all three, now I want you to think of all three together, okay? Look at this stock. What is this? This is NRG, okay? This is a huge watch list. And if you want any of these watch lists, that goes for anybody here. If you want anything that I'm showing as far as a watch list, because I'm going to go through several today. This is just what I call my main list. The reason it's my main list is because I keep my macro analysis instruments or symbols on top here. So these are things that I'm always on top of: the SPY, the Qs, the diamonds, the Russell 2000, what gold's doing, oil, what natural gas is doing, what the VIX is doing, which is our volatility index, and then I have our CPI or inflationary numbers here. But then I've got a whole bunch of other stocks that we teach to, we trade to, and I've got a whole bunch of watch lists. So these are all actively used watch lists throughout the years, throughout the month, throughout the weeks, depends upon what's happening. But if you ever want any of these, just say, give me that, I want the watch list, and I'll share it to you. I can share any of these watch lists right into the event for you. Okay, so don't worry about that. If you want something, let me know, and I'll do my best to get it to you. All right, so when we see these trends, I want you to think of the more the better. Okay, so these are giving us 3. 1, 2, 3. So like this example, when we're basically above the blue, we're above the yellow, above the red, that's 3. That is a conservative 3 conformational direction movement, meaning we've got 3 of our trends below us, right? That's a 3-step confirmation. Some of these, like we went with the SPY, has only 1. So trading is very similar to sports betting. I think there's better odds for us versus sports betting, though I enjoy my sports. But the concept of putting odds in your favor. Think about playing Texas Hold'em or any other type of poker game, right? There's odds every step of the way. There's odds given on what you're initially dealt, what your 2 cards are. As each card comes out, odds are placed, odds are given, odds are there, right? That's the same thing with trading. So the more confirmations we can have on our side, the more probable we're going to be successful. Knowing there's no absolutes, okay? There's no 0% chance, there's no 100% chance. There's all the probabilities in between. So right now with the SPY, we have 1 confirmation, right? We only got 1 level of support. NASDAQ, we only have 1 level of support, right? When you see those things, you're going to start thinking of, we need to find support. Whenever we start dropping below 2 of the 3 trend lines, you're going to start to think of hold and wait. I want you to think of, okay, let's wait to see where the low is, or where's the next bottom going to come in. To me, a bottom isn't an ultimate bottom, meaning the absolute bottom, just like a top is not the absolute top. I'm talking about where we sit now on this symbol. This is the Dow Industrial Average. This is actively pulling back, okay? This is retracing. So something important to note is that the market does not go in a straight line. I think we all know that, but this is the verbal dialogue that happens. So price extends and then it pulls back. So extension retracements. Anytime we're in an active retracement, meaning the market or the price is coming back to us. So in this example, we're going up, pullback, it's going to come down. Where that falls to is very important, okay? Whenever we see an active pullback, we're going to wait. We need to wait to see where support's going to be found. This is if you want to be conservative. There's many ways to trade aggressively, okay? I'm talking about a conservative approach, so that way no matter what you're looking to do, when you're looking to do it, you're going to know when we see a pullback, we must get a low. We must establish a low price so we can then buy back in and know that we have the odds that we're going to go into an extension mode. You will dramatically improve your success if you can buy before the extension, meaning buy after the pullback, versus trying to catch an active extension. The verbiage is important that I use. It's a distinction. Catch versus chase, okay? We don't want to chase, we want to catch, okay? So I'm going to give you those rules in a few minutes here. But just think, if I can catch the movement, it's a better proposition than trying to run something down as it's already taken off, okay? Catch versus chase, very important. Let's see, we got some watch list requests. Okay, so here's a watch list. I'll drop it in here. So this is, and I'll label them because if there's many, I don't want you to get confused. So this is going to be my watch list. This is called my main list watch list, and I'll drop it into the chat. Okay, so it is now in the chat box. That's my main list. The next piece I need to share with you, okay? There's 2 sides of analysis. Now, the beauty, once again, to recap, is that you don't have to draw anything. Okay, everything's gonna be automatically done. Once you set up these charts the way I've shown you so far, you don't have to do it again. It's a one-time thing. But the next crucial piece is tying in pattern. The pattern is what you see on the screen here. Now, I'm not gonna go into, I may go into retracements. I usually do. But before I do that, I want to add that, to me, one of the most important components of understanding where we are and what's happening now is understanding how to measure the level of commitment that the market is given. So I'm going to introduce now momentum, aka volume, to the charts. So at this point, on the bottom here, you see a histogram or column graph down here, and this is representing volume, the number of shares traded. So this is the settings of setting up your volume with a moving average. Okay, so same concept of the charts up top, the bars, where I'm trying to get a smoothed out trend using a 10-day, 20-day, 50-day. On the volume, I'm going to use the middle moving average value, which is 20. So that way I've got a consistent analysis between the middle volume with the middle trend line. On my longer term, the 50, 100, 200, which I'll share, I use the 100-day. Okay, so whatever's in the middle of your moving average, you want to match that up with the volume below. So it's a 20 moving average on the volume, and I've got a column bar. So I don't have a line chart, it's a column. So this value is immense because there's spectrums to volume. Volume measures, to me, activity. That activity is a measurement of the conviction in a particular stock, or in this example, the SPY, right? A symbol, the conviction. If there's high volume, that means there's a lot of conviction. There's people convinced about a particular stock that they're buying above typical ranges. They're buying more than usual, or they're selling more than usual. So you have high side spectrum. You've got periods of high volume, high trading activity, tells a story, right? It means that there's a lot of conviction, there's a lot of confidence, there's lots of optimism, there's lots of pessimism. When you're optimistic, you buy. Pessimistic, you sell. Now, the pessimists can also wait. They can hold, they can stay out. So I always describe this, that any optimist has to deal with two types of pessimists. The pessimist that's selling, they're dumping, they're running away by selling, or they're staying out of the market. Okay, those are the more pessimists. Now, I'm not using a negative connotation. I'm not judging. It's not negative, it's sentiment. Pessimists are going to sell or they're staying out. Optimists are going to be buying. Okay, they're optimistic. They feel good. It could be whatever reason they have to be optimistic. The actual action, the action of buying, is going to be shown in data. So it tells a very important story, segment by segment, time by time, of when and where people become optimistic or pessimistic. So the surge is high spectrum. Low volume is the opposite, right? That means there's a lack of enthusiasm. There's a lack of conviction. So you can be pessimistic but not do anything, and no one else is doing anything, and that means that you're going to be low activity. So the activity wheel here that you see comes into play and helps us determine, is the market going to be moving fast? I say market, but let's talk about the SPY. If I'm looking at Apple, it could be the same thing. So if I'm looking at Apple and I see low activity levels, then I'm in an agreement that price is going to either go to the right or it's going to fall. Typically, price goes down on low volume. Why? Because No one's there buying it to hold it up. Okay, so if there's no activity on the buy side and no activity on the sell side, you'll see price slide, price go down. So let's switch, and I've moved up to Apple, okay, just to give you a different look. I want you to see the market reaction based on the movement that you see against the activity below. So when you start to see big bars show up, I'm looking down here on the bottom. We have the initial crossover, okay? So whenever you see, just to get you some terminology, whenever we see a cross of the price, the bar is crossing above the 50-day, okay? That is a point of reversal. The point of reversal, we start to change our thinking from selling into buying, okay? So down to up, we start transitioning to buying, right? Now, one of the keys is to follow the money. Retail traders, all of us combined, cannot move the market a large degree, all the retail traders. So what we're actually doing when we're looking at volume is we're looking around and seeing who else is joining the party. The more that come into the party on our side, the more consistent movement we're going to find. So watch what happens as the market here, you see how it starts to, it's below this fuchsia line. That fuchsia line, remember, is a 20-day average. That's our trend line. And then you see here on the 14th of July, you see us spike up and hit our volume. Now, the volume is distinctly lower. It's about half of the volume in the markets as it was just 3 months ago. It's also the summer, okay? So the summer historically is also what's known as the summer doldrums. It's a lower activity normally in normal conditions just because of the summer. But regardless, you see inflection points, right? So initial crossover happened here on the 7th. But then after that crossover, you see the price slide to the right. And it wasn't until we saw a spike on the 14th that you saw this trend start to take off. That is a huge objective distinction. It wasn't a feeling. It wasn't that Apple said, oh, we got our, iPhone 13's coming out, okay? It's purely based on what we see on the charts. So this activity level, you can look in the top left corner, was 78 million shares on the 14th. The day before that, there was 71 million. Okay, so we had 10% more activity on the 14th. So it's not only just what's happening on the 20-day, what's happening recently. Do we see an increase of the recent activity? Then what's happening on the charts? So if you go back in time here, this is where we were, and you can see a distinct big green bar show up, backed up and supported by activity. That is what the momentum breakout method is all about. It's about tying in the patterns on top of the chart, looking at the pattern, the price movement, the type of candlestick in relation to the 50-day, 20-day, 10-day moving average, plus, and it's a plus, plus, plus for me, plus the volume below. That is the conviction that can bring you and I confidence to know that we are not alone in the forecast that Apple's going to move up in price. And so what you're going to see play out is, I want you to look vertically, look at the price, look at these bars go. You're going to start to see low volume show up again. Now price is still going up, but the pullback, you see this pullback start? So this volume kick-started this price move. Then you start to see the volume fall off. So volume tells us when things are about to go, and then also when things are about to stop. So they can be a trend reversal sign, meaning, okay, we're about to move a different direction quickly. The opposite side of the spectrum is that move is about to end. It's about to end. We're about to retrace. So as we continue down, another spike occurs. What do you think that means? Do you think that means we should be buying or selling? Type in buy or sell. What do you think that means to us? Why are we buying here? Well, we're above the 10-day, above the 20, above the 50. We just got done retracing, right? This is the retracement, the pullback, pulled back to support, found support on the open, buyers showed up below us. That's a 10% increase of volume over the average down below, right? 78 million versus 71, that's about 10%. Okay, that's a, uh-oh, something's about to happen. Price then starts to rally. Okay, this method I'm sharing with you, it may feel very simple to you. It's supposed to. Look at the volume spike, creates a gap up again. So volume is one of the most underutilized tools for the retail trader. You see, many of you probably heard articles, read articles, or seen movies about those hedge fund traders. They got all the massive wall of charts, right? And you think they're using some crazy over-the-top indicator. Some of them do, right? You buy a Bloomberg terminal, right? I mean, you're getting $2,000 a month for Bloomberg terminal access. Last I looked, might be $3,000 with inflation. Massive amounts of money spent around their tools. And they use the phrase momentum. It's actually volume for us retail traders. When that volume slides, it tells us that something's about to change. Typically, that means a movement is about to end. Doesn't mean it's reversing, okay? It just means that we're gonna expect a retracement. So any trade that you're in from this day forward, I'm challenging you to pull up a chart. I gave you the setup and watch as each chart goes by. Watch what happens when the market pulls back, then watch what happens when it goes off again. 9 out of 10 times, you're gonna see alignment of trend and volume below it, pushing up and rallying up price. That's an uptrend. Same thing in a downtrend. You'll see it in a downtrend take place. Same thing. I'm only on Apple. You can go to, I don't know, type in one stock symbol, we'll pull it up. Something that we haven't gone over. Type it in. And if there's a couple, I'll do a couple, I guess. Is this IPI? That's not what it is. What are you looking for? Oh, Intrepid Potash. Never heard of that one. That's cool. All right, so we got a couple. Microsoft, Tesla once hung. Stock split coming up. Disney, ET, NVIDIA. Okay. Oh, yeah, look at this. So what do you think Intrepid's trend is about to do? Right? That's a great inflection point right there. You see this? Support, 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 bang. Now, the only thing I don't like about this, now, I don't dislike anything, okay, is it is a low liquid stock. You know, it's averages 299,000 shares a day. My minimum is 100,000, so it is above my 100,000, but I typically like to stay above the million or more. But this has had, let's see, I'm just looking at the volume. Yeah, this has come up on the market. It's been around a while, but pattern-wise, it looks good. It's just on the lower activity level spectrum. All right. I'll talk to you about how to set up trades. I know a lot of you are going to want that, and I'm going to give it to you. Okay. So let me actually build a watch list for today. Let's just do it that way, because you're going to be amazed at how much info we can go through. 823. Let's do this. Oh, 823 class list. ISI. Oxy, we're already in Oxy Live. Citigroup, already hit a profit target on that recently. Chewy, plug. All right. So here's our class list. Okay. Also low volume. Oh, that's ISI. It's the wrong one. That's like a crypto or something. Let's see here. Let's get the right ISI. There we go. IPI. Maybe if I do it right. Intrepid. Okay, so we went over that one. We'll go into more detail in a second. Let's just pull them up. Okay, Microsoft. here's our initial crossover. Okay, so we had some crosses here. See this volume? I mean, this is the most simplistic and powerful approach to trading. Look at this. It's a buy. Okay, I'm not gonna, you already saw what happened. I want you to see what it looks like vertically. Trending down, boom, big bar, big cross reversal point. You sit on top. I'll explain what I mean by sit on top to catch. And obviously you're taking advantage of it. Now, watch as volume slows down. You see this move down, volume falls. You see a spike in price. Now you're starting to see volume slow down. You see this volume slow down here? That's where you start to say, okay, we're going to probably top out here. We're going to pull back. Pullbacks on the horizon. You see the slowdown? Low volume, bears take over, bears surge down. Okay, see that volume flatten, volume increase. You look up, okay, bears pulled price down. Type in yes if that's making, is it clicking with you? Are you visually seeing the alignment of low volume, tops, precedes a pullback, next extension, you see volume show up. You see that? Okay, good. Just want to make sure it's clear because I can try to show you a different way. And then we have today. Okay, now we just got done. We extended, ran out of volume, price fell, price rapidly picked up yesterday, okay, Monday, all right? Now you see a bar like today. Now, to get a low, a common domain, public domain definition, what that means is that it's defined the same way for everyone, right? It's like gravity, right? Gravity is gravity. No one owns gravity. The formula for gravity, everyone has access to the formula. Same thing with defining a low in the market. A low means you've got 2 bars higher to the left, 2 bars higher to the right. Right now, we don't have any to the right that are higher than this price today, okay? So we can assume that this is the potential inside, you'll hear me say that, inside low. So we ran out of momentum, price pulled down. We had 2 days of increased volume down. Now we get low volume, indecisive bar. Do you see a sense of this potentially being the low, right? Meaning the bears have lost momentum. Type in yes if you, does it make sense as I talk it out? Now we have indecision. That's an indecision candlestick, meaning the open and close are basically the same price. So we had highs, we had lows, and we closed at basically the same price. Okay, that means it was a tie. Think of it as a tie between the bulls and bears. A tie happens at high volume as well as low volume. This happens to be a low volume tie. So if this is in fact the low, what type of bar do you think we'll see next? What color do you think would show up here, most likely? Type in green or red. Green bullish, yep. Green bullish. So we're about a day or so away here to confirm, right? So the goal here is not just to jump in everywhere, it's to have a consistent approach to timing our entries and knowing when it's time to actually pull the trigger. So ultimately, to illustrate what I'm referring to, is we need to have, what's the best tool to do it? Let's do this one. I want to have this type of look, okay? I want to have a U-turn, aka pivot point setup, okay? That type of look, meaning I've got 2 bars higher. From there, if we're gonna buy back into Microsoft, that means we found support, okay? So if that becomes a buy-in, we need to see a green bar plus what? High volume. That's the next entry point. That's the next entry. So we're not gonna guess, we're not gonna assume, though I use the word, I'm not assuming anything, I'm giving you what to look for. That's the look, if this is gonna be support. Now, how do you know it's not gonna be support? Well, it keeps going down, okay? So if this is just a today thing and tomorrow comes out lower and we keep trending down towards this 50-day, then obviously it's not done, okay? It can turn back on and run down. That's why it's a 2-bar wait, right? It is a forced patience to look for those 2 bars, right? We're forcing ourselves to wait. Now, it could be another doji. It could be. I'm not guessing yet. I'm saying this is what it should look like. If this is in fact the support, the end of this pullback. Now, the end of the pullback here is relevant. Where it happens, I'll explain that a little later if we have time, okay? I just want you to be thinking about what we look for, okay? So it's in between, deep retracement. We're waiting for the next move. Tesla, same thing. Double top, look at the volume slide here. It's more than likely it's because we have a stock split, right? So stock split's coming up. A lot of people, I've talked about this last night in my Market Pro Live Club, talked about the fact that this is going to be low volume leading up into the stock split. The stock split is going to give us volume. I believe it'll give us volume spike. I'm not telling you if it's up or down. We're going to let the direction show itself. But you can see as we hit these highs, this is the double top, pulled back, activity fell, you had a jump to activity, put us back up, failed to get higher, volume slid off, and now we're pulling back again. Okay, so you can see and get a sense of, looking vertically, how a price moves and then slows down. Okay, that up and down price swing action is what I'm training your eyes, because it's really telling to know where are we at in relation to the trends. Okay, what's happening below us? Are we moving up, or is that move up going to end? Is that pullback happening? I'm glad we've had bullish movements over the last month or so you can see uptrends, because the downtrend's the same thing, it's just opposite direction. So extensions down means high volume selling. When you hit a low, you see volume slide, you see bulls pick up price, bulls lose momentum, and then market comes back down again. Okay, so same thing, it's just inverted. So this is a wait until we get a next bullish move. If it is bullish, to give us the volume, we need 2 bars to the right. So we actually have 1 bar, right? This low is lower than today's low, or excuse me, is higher, right? Today's low is higher than yesterday's low. So this is the start of a potential low. So if tomorrow comes and we're above this low, okay, that could give us that low to then get us an entry to try to take out this high. Okay, so we're closer here than we were on Microsoft, right? Microsoft just had the low today. This is what it looks like when we're 1 day ahead. Okay, that's Tesla. Disney is not as quite of a pullback. We're still above the 20. Okay, great example of Disney, strong rally, big old volume. Okay, pulled back in the day, extended, see the volume slow down, topped out, volume sliding, price slide. So this has not stopped yet. This is an active pullback. We don't have a low yet. It's still an uptrend, but it's in a deep pullback. ET extending. Oh, beautiful example for ET. Look at this. Here's the cross, volume picked up, volume slows down, bears pull down, bears volume slows down. See the volume to the right, lower, lower, spike volume, momentum carries. Same thing here. You see the top, volume slowing down, price pulls back. Today, volume shows up, drives price up. Okay, simple inflection points to be able to know, are we actively going or are we anticipating a pullback? These are just random stocks. NVIDIA pulling back, volume slowing down. I mean, it's on every chart. This is the recipe. Doesn't matter what it is. Pulling back. Same thing here. We're waiting just like, what was it? Green bar plus high volume. That's where we're at with NVIDIA. Same thing here. We have 1 lower. Today was lower than yesterday's low. We get 1 more, and we have the volume. You're going to sit on top and catch. Okay. Occidental. Tell me what volume does, right? Volume, huge volume starting on Friday, Monday, Tuesday. Price surge, took out this high, okay? This is actively going. So at this point, this would be chasing. We're gonna wait for this to happen where you start to see volume slow, price will come back to us. Price comes back to us, Then we look for the right entry point, okay? But this is actively running. There's no reason to jump in and go willy-nilly. Qualcomm, pulling back, retracing. It's close to testing this 50-day. Large majority of the time, you'll get a bounce off these big levels, okay? So we're trending down towards the 50-day. Volume is sliding. We should see some type of support found, meaning you get some wicks, you lack the movement to move below it and close below it. Okay, so we're still a couple days here for the next buy. See, I want to be buying here. I want to be buying here, right? I don't want to be buying on the tops. Buy low, sell high. Citigroup, same conversation. You're going to see this everywhere. We actually had some active trades on Citigroup a couple weeks ago. Look at this reversal point. This is a reversal point. You see this huge volume show up off this low? That's the buy. That momentum carried up, volume slid, pulled down, volume spike again on the 10th, volume starting to slide back down again. It's the rhythm, great point, rhythm of the market is what was put in. Chewy, if you're into Chewy, it's been hot since the reversal back in June. This is gonna set up if this support holds. You're a couple days away here. If Chewy's gonna run again, it's gonna bounce off here, give us that little pivot look. Next big volume shows up, and it looks like it's trending towards happening around the earnings report, right? And that's what's amazing, is you'll see a lot of the technicals line up with what's about to happen. This case, it's earnings. Pulling back to the 50, okay? So there's gonna be a battle here. If we keep closing above the 50, that's your sign that this is gonna be support. Support means we should set up our next move back up again, okay? It's all about keeping things the same consistent manner of analysis. Plug, electronic components. Look at this massive volume starting on the 28th, push up and continue. So you have these volume spikes, just keep pushing, pushing, pushing. And then from the high in mid-August, right, you see it pull back. See that volume pull back? Now you're finding some support. What do you think we're gonna do here? We're gonna green bar high volume, okay? We wanna catch and buy pre-extension. So we wanna let the market come to us, and then we wanna buy it. So there's really two sides. It's buy the cross on the bottom, right, when you first cross, or in an active position. And that's just going through your list that you all just gave me randomly, right? So it's the same method, up and down the line. Now, there's a way, and I'm gonna give you the recipe in a second, to actually search and find these automatically using stock screeners. Okay, there's a way to do it. Now, this process I'm sharing with you is what I refer to as the momentum breakout trading model, okay? It's used on both swing trading, long-term trading. You can even scalp if you're a scalper intraday. But the method of how we use trends, how we use volume is the same across the board. The way I trade options is the same way I find the next stock to break out. Now, in simple terms of trading options, buying calls, buying puts, covered calls, in the money, out of the money, at the money option trading, it all comes down to finding stocks in a particular pattern. So the method to do all of this legwork is all the same up and down the line. And so ultimately, having a recipe that you can repeat over and over again is the true benefit to me of consistency, is having a singular focus, a method of finding, identifying, setting up trades, having equity management that is the same up and down the board. That's really, to me, what I find to be the most consistent method, because ultimately, in my class, I teach classes twice a week. Well, multiple times a week, but for this program, twice a week. And when I'm in class and there's a question, I see the same things that my clients see, because we look to the market and we look through the market with the same lens. That is how we can really streamline this process. Now, what I'm explaining to you, for those that are new, may seem difficult, may seem simple. You know, to me, everyone's going to have a different experience. I'm going to turn off the webcam here for a second just so I can get more real estate. But ultimately, throughout this process, I found that combining learning this process and also being given signals, okay, meaning I find my top picks and I send them to you. Okay, so it's all based on what you're most interested at any given point. See, some people don't have the luxury of time, so they don't really have time to spend, 4 or 5 hours a week trying to learn how to trade. But they still believe in the concept, right? So if you're a believer, and I don't need 100% belief today, okay? If you're a 50% believer in what I've shown you so far, the real question is, if you saw it over and over and over again, saw me run this strategy, saw me deliver signals to you, where you can then cross-check and see what match trading. I don't like to talk to myself in third person, but I'm trying to delineate between you doing it and me doing it, right? Me deploying this strategy that I've been using for a decade, well over a decade, and then delivering to you options opportunities if you want to trade options with it. And that way you're able to combine learning this method of analysis and trade identification plus getting signals delivered to you, right? So it's really a way to learn and then potentially earn along the way, being led through the process, right? And so that's why I was mentioning classes, because I teach a class. I also deliver signals, options trading from, out of the money, in the money, covered calls, long puts, depending upon what the market's given us, right? And so the overall method is all dependent upon your individual preference, meaning some of you want to learn. That's fantastic. I always love to teach, right? Some of you want hand-fed signals. You don't want to learn anything. I don't necessarily like that, but if that's you, then that's fine too. Because life changes and you may not have time today, but you may have time in the next couple months, right? It's up to you. And so the reason I go through that is simply to let you know that today is not a one-time event. It doesn't have to be a one-time event. I'm going to share on the screen, and you can take screenshots of it, 2 of my 4 main traders checklists, and it's all for uptrends. So some of you can take it if you have any experience and try to run with it, which is fine. Some of you are going to look at it and go, man, this is awesome. I want to try it. That's fine too. And some are going to be like, I don't even know what this even is saying, right? Which is 100% understandable. But this is an opportunity today where not only am I teaching you, I teach this all week long, but if you want to join the club, as I like to say, then you can do so too, right? So I'll give you some opportunities here to join the club so you can get more of this type of training, because what happens is this market is changing. This is the most interesting market that I've seen, because we're getting all sorts of conditions in a very small window. You're getting upswings, you're getting sideways swings, you're getting big down swings in just a few weeks. And then traditionally, over the last 5 years, if you take out the coronavirus shutdown, this condition is very rare. So it's been a wildly successful training because the markets are changing so often that every single tool that I've developed and technique I've used in just the last month and a half, because the evolving conditions that we're up against, right? And that's what, and that's why I just wanted to mention that to you, because I know a lot of people are asking, well, what if I need more help? I can't get this one time. Is this recorded? It is recorded, but the markets are always changing. So if you like the method, then I don't want you to put pressure on yourself to try to master this in an hour and a half. Okay, so just rest at ease there. Now the next piece is putting the actionable steps in place. All right, because it's one thing to see what we're seeing. Okay, hopefully it's more simple than maybe what you're doing right now. Okay, but it's real different when I pull up a chart right now, and I don't know, let me see what's going on with our screeners. Let's see if anything's popping up. Let's go to, probably gonna be a lot of energy stocks on my list today. So if I pull up this stock that my custom screener found, FCX. It's in the energy world. Where do we buy? Where do we get out? Now, you don't have to answer it, but if you have the answer, that'd be great. But ultimately, I'm going to give you the actual recipes here of how to do it. Okay, because I have been doing this long enough, I can fully appreciate. I trade with my clients as well. Okay, so I fully appreciate what it feels like to pull the trigger, to go in without the future to be known and put a active trade in your account, right? I know exactly what it feels like. Done this long enough, taught thousands of people just like yourselves, okay? So understanding exactly and precisely what to do and when to do it, okay? This is gonna be the game plan. So to do this now, I'm gonna give you a full entire trade and just so you can see the process, okay? Now, this in front of you are 2 of my 4 most used step-by-step checklists. On the left, the big difference is obviously the title. The left is conservative. It's a conservative bullish checklist. On the right is the aggressive bullish checklist, okay? The difference is pattern. Remember what I said about the conservative side? Having 3 confirmations and a trend, that's conservative. The aggressive has 1, okay? 1 trend correction, and that's just the 50-day crossover, okay? These are the 2. The trade setup below and below the screenshot is how you set up the trade. Some of the verbiage here used, and I'm going to show you some recent results from the program so you can see what it looks like, what a trade setup is, and then what happens with the trade, okay? Set pending entry. Some of you may not know how to do that. Set pending entry, set 2 profit targets, set stop loss, okay? Now, that's the same on both sides. If you want to trade the option's there too. There's not a 20-step process to set up the option trade. You don't need it. Those are very simple rules to selecting an option chain. And don't worry, I've got a full class for those that sign up to join the club. I'll give you details in a moment. We've got an option mastery program in there so you can understand exactly how to trade options if you've never done it before. This is both the same, okay? So we set up trades in a specific manner, and then this list here in the middle, this little screenshot, it's hard to see online, but if you take the screenshot, you can zoom in. This is the settings for the screener. So with the screener, that's how I just found the stock that just pulled up. Okay, so I'm back live with you on the camera. So I found FCX. I didn't go in and look at thousands of stocks. I went down to my stock screener, went to my conservative bullish breakout, and I've got a list of 31 stocks. 31. If I want to be aggressive, I'll pull up my aggressive screener and I've got 34. All these different stocks. There's 7,200 common stocks, okay? So I'm not looking at all of those. I'm looking at 31 on conservative, and I'm looking at another 34 on aggressive, okay? So I've got a hyperlist focus. Now, the rapid profit method is the trading signal program that we're currently in open enrollment. So I leverage this same filter criteria to find signals I send out. The reason I say that is because I send out 1, sometimes 2, depending on what's going on in the market, every other day. So there's a lot more opportunities than just 1 or 2 based on what's happening today. So effectively, we'll stick with this FCX and you all can follow along if you want to, but this is how we go in and set up the trade. So if you have the checklist, obviously I have it memorized, I've done it so long. What we're gonna do is we're gonna set a pending entry 1 tick above today's high. Now, why? Because I want to catch a breakout. The final step of a breakout actually happening is the price actually going up, right? So for the price to go up, that to me is the sign that I'm on the right side, right? Meaning that I'm above the previous high. That means the price has the upward movement, right? That's the breakout. So I don't use market orders on entering. I'm not sitting in front of my keyboard, it's wireless. I don't sit and try to smash my keyboard to try to get in. To me, that creates tons of anxiety, right? And remember, I'm trying to lower the anxiety versus increasing anxiety. So the catch method is where I want to really spend my time with you. Now, the setup is just about how we set up the trade, okay? If you understand some basic terminology, this may make sense. If it doesn't, once again, I've got tons of videos of how to set up your trading account. Now, I use Thinkorswim. That's my broker of choice. This is used across, I would say, the top 8 most traded brokerage accounts can do what I'm going to share with you now. So the first step is I want to catch. So I'm going to sit above the high. So it's not a market order. You're going to use a stop limit order or a stop limit buy order, or you're going to use a stop buy order, okay, depending upon how aggressive or conservative you want to be. So I'm just going to sit and I'm going to create this trade so you can see what it looks like. So my pending entry, and I'll put it in my account in a second so you can see it. I want to buy FCX tomorrow only and only if it marks at 3205, which is in blue, or higher tomorrow. If it goes to the side tomorrow, if it goes to the right, or if it pulls back tomorrow, I don't want to be in it. So I'm using that previous high as my last line in the sand. It's my price line that says, okay, I want to buy it. I want to buy above the current price because I'm not trying to buy it cheap. I'm trying to catch the next prevailing move, the breakout move. That's what I'm trying to do. That's the concept. This is how you deploy it. From a stop loss, I always use stop losses. I'm just going to go to my recent low, and I'm going to put my stop 1 tick below it. Now, this is all in the checklist, but this is what it looks like. Now, the most straightforward way to pick a profit target is to leverage and use where price has been. Okay, that's previous resistance. Now, to not go too deep on it, resistance means I've got a high with 2 to the right lower and 2 to the left lower, right? So now I'm talking about a high, okay? Now, I want to have movement, right? So that's arguably and actually a high, but it's not much profit. You know, from this high to the entry, it's 2%. Now, if you're into 2%, I guess that's fine, right? But most of the time, that's a little out of the league when it comes to your profit target. So because of this big sell-off that we experienced, because of how deep this ran, we don't have much resistance until we get up here. So that's 43. Okay, so this is 43. I'm not judging it. I'm objectively looking at where the resistance levels are. So I'm gonna use profit target 1. Now, the next high resistance is actually way up here above this previous high, which is in April. Okay, so now I've got a second target. Now you can use multiple targets. I use a method called the price forecasting model, but we'll stick to this more straightforward way for today. They both work. It's just one's more dynamic than the other. Oh, I got my charts frozen. Okay, there we go. So hopefully this makes sense now. You're looking at a chart. So this is what it looks like. I just drew out everything. So I'm 1 tick above today's high. That's what's on the checklist. I found my stop loss by going 1 tick below the recent low, which is yesterday's low. And I've got resistance 1, resistance 2. That's my profit 1, profit 2. So there's probably some road bumps like this support, but I'm going to keep this straightforward. So based upon this trend reversal with volume, I want to be able to catch a breakout if it continues tomorrow. I'm on a daily chart. I'm trying to catch the next move. That's tomorrow. So at this point, the initial trade from a risk reward ratio is a stop loss of about 8%, and this is just buying the stock, and then target 1's 36%. Okay, target 2's up at 58%. So very strong risk reward ratios. If this does turn and take me out, I'll deal with an 8% risk, knowing that I'm going after 36. Okay. Now, understanding 36, that's time. We're not going to get into time, but regardless, this is what a trade setup looks like, following the checklist. Everything was objective. I didn't pull a magic percentage out of my hat and say, okay, this is what the profit is. This is what the stop loss is. I'm not using a trailing stop in the traditional sense. Now, the method I teach this, and in fact, I deliver these in the rapid profit method, is I give instructions of what to do when you hit the targets. So profit target 1, anytime we hit a first target, your goal is to lock in profit. That's why it's called a profit target. So if we hit a target, I want you to take profit off. I'm going to show you how to set it up, but you're going to automatically take a portion of your trade off. Now, I like to trade in 2 segments, so it's a 50-50 model. Half is going to be taken off the table at the first target. The other half I'm going to leave to run to the second target. Now, every chart's different. This chart happens to be this target level. Now, the difference, though, is once I come up and I actually hit my target, I'm going to move my stop loss at a minimum to break even. Okay, so this process is really a 2-step trading process, but it starts with the first trade. So to see how it flows, it's actually very simple. I actually use an OCO bracket setup. One cancels the other. And the reason why, once again, is to remove any type of subjectiveness. So here's FCX. I use TradingView. This is or Thinkorswim. This is what we use for tracking all my signals that I send out. This is the account for that. So what I'm going to do is I'm going to take these details. How many of you saw me a couple weeks ago? Type in a yes if you saw me a couple weeks ago in the event. We had an event like this 2 weeks ago. How many were there? We also ran the replay, I believe. So how many of you saw the replay? Anybody remember what we traded? All right, so it looks like Van, Tao. I recognize more of you were there. Yeah, DVN. How's our DVN trade, Devon trade looking? It's looking good, right? Okay, that's just from a couple weeks ago. So I just wanted to double check, so I was going to show you what it looks like. So when we look to our trade setup, so FCX, what I've done is I've just taken the order down here, and like I said, you don't have to memorize this. I've got tons of videos around this for you. So I'm going to buy 50 shares only if it breaks 3205. Okay, 3205. If it does, so just think about this. It has to, the green trade has to go live. So we have to. I'm going to use a buy stop. I'm going to explain why, but this is a certain order. Okay, so a buy stop at 3205. So it's got to be 3205 or higher. That's what the stop means. I'm going to buy 50 shares. My limit order, the first of my sell orders, is going to be my profit target, so 43.62. Now my stop loss is going to be the stop loss, which is 29.28. So look at the numbers here. I've got 50 shares coming in. That's what I'm going to buy, only if 3205 or higher happens tomorrow. Then I've got my close at 25, so half, right? So 50, I've got half. So I'm going to take half off at 43.62. That's my first profit target. And then if I get stopped out, meaning I go in and then it comes against me, I want to close out the whole thing at 29.28. So this trade, the green trade, which is your first position, is good good for the day. So it's good for tomorrow. It has to happen tomorrow, not the next day. I'm going to change this to be good till close because I always want to have my money protected on the downside and the upside. I want to be able to lock in profit automatically, and I want to be able to close out automatically without me emotionally trying to dissuade myself. So this order type and order method really helps remove the hands-on anxiety. Now, once I do this, you're going to be able to see it in more detail in the confirmation. You see it says buy 50 shares to open. Only if it's 3205 or higher. Okay, so some of you may not even know what a buy stop order is. So think about it this way. Wherever the price is, okay, so if the current price, which in this example is 31.79, if I did a limit order, that would mean at or lower. Okay, so limit is the floor price. No, it's the high price. So the limit is the higher or lower. I'm not trying to buy this at a lower price. I'm trying to buy this at a particular price at a particular point of the pattern, which means higher than. So if I have a limit and I put in a trade for 3205 and a limit order, that means if it opens at $31, it's going to get me into the trade. I don't want that, because if it's down at 31, that means it's pulling down. I don't want to be in it. So if I use a stop limit order, which is a order type, I'm setting a range. I don't want a top end range. So a stop means the lowest price, 3205. So a stop buy stop is when the price is above you. Okay, so that's the order type, and that's the mechanism. So at this point, I have a fully automated trade setup. So if I'm not in front of my charts tomorrow and FCX hits 3205, this trade will trigger automatically. I don't have to babysit it. It's going to happen. If I go live, let's say I go on a vacation for a couple weeks. If it hits 43.62 while I'm on vacation, it's going to close out and lock in my profit automatically. If I get stopped out, it's going to lock it out. Once I send it and it's in my working orders, such as this, it's working. It says working. This time frame is tomorrow. So if this does not happen tomorrow, if we do not hit the 3205 tomorrow, this trade will cancel. This is the time that I do the majority of my trading right now. It's when I do my trading, is right now. Less stressful. I don't have to worry about any noise in the market. I set up and I look to catch tomorrow. Here's an example of trades triggered. This is orders that I sent out for the team. This is a put on Pepsi. You see the order time, 9:43, 9:31. It was all done automatically. All done automatically. I didn't babysit it. Didn't have to do anything manual. It was already done. That's from today. This trade was from last week. I want to show you some of these examples of what it looks like in action. Okay. So when you hit target one, once it hits the target, if it's the stop loss, you're out of the entire trade. Now, if it hits the target, the profit target, you're closing out half automatically. Your other half's unprotected. You don't want that to be the case. So when you hit the first target, you then transition and place a new bracket to cover that trade. Stop losses break even, then you then enter your second profit target. Okay, so every trade is always protected. Every position always protected on the upside and the downside. So I send out instructions, so you don't have to guess. Instructions go out every step of the journey, so you'll know how to stay on top of it. Okay, but that lesson is very important. Money management is extremely vital, and having a method that does it obviously is what I find very exciting about this. So for those that weren't with me, I'm going to pull up a trade. This is Devin. This is from this event last week, or this is actually about 10 days ago, I believe. So this is what a signal actually looks like in the market. So we actually set up two types of entries. We set up a high price, set up a low price. But this was our top side entry. I'll just explain that one so it's easier to understand. But this is actually the setup that we found and used. And this was on the 11th. So price is now at $70. This is the trade here. This is Devon Energy. You can see the time and entered. See 8:12 at 9:50. So we set up this trade in the actual event, itself. Set it up for the next day. 11th, I was in a class like this one, 12th triggered. So set up both the stock side and the option side to teach the concept. Stock is up 9%, option trades up 80%, just since the 12th. So if you took the trade, you have enough, way more than enough, to join the rapid profit method group, right? But most people tend not to, their first one, that's fine. But the method, if I go back and I'll go to the same bar that we looked at, this is the exact time of where we were a couple weeks ago. And you can see big bar, sat on top, profit target set. This is exactly where we were a few weeks ago. I went through the same example of how to set up the trades. So from that standpoint, right, you just fast forward this, you can see the market movement. We got in, short pullback, now active extension. 80%, open position, still active, running strong to our profit target. This is a different trade that we had just a couple days ago. This is a one-day trade. And this also had an option trade to go with it. This is a stock called NU. Let me pull it up for you so you can see it. So this was part of the rapid profit method. I'm going to show you what the signal looks like as well. So this was the setup we had. Profit target, our stop loss was below there. And not only did I give the stock out, I also gave out a very specific option trade. So it told you what option to select, which expiration, also told you what strike price, what limit on the option chain. I'll show you what the actual copy looks like so you can see the detail of it. Everything was set up, high volume bar, bouncing off support, all laid out for you. One day. Majority of the time, I don't like to get out same day. Now, you do have the daily trading limitations. It's 5 consecutive and a rolling 60-day period, so this counts as one. It doesn't happen often. Like I mentioned, we're usually in days and weeks, not a single day. But momentum is momentum, and when it goes, it can go. So when you look to a signal or what a trade looks like, what is important is, do you know how to set it up? Okay, so this trade was 96% profit is what I caught in our tracking account. So it was about 50 cents on the premium, and it jumped up to like 98 cents on the exit. Okay, so 50 cents a share for the premium. So depending on how many contracts you bought, it was 50 cents in, ended up closing out automatically at 98 cents, 96 cents. Okay, so that means you profited about 96% in one single day. That's a momentum trade, and what it looks like when you have a lineup, a volume, and this one also happened to have the option trade with it. Okay, so not every trade is optionable or has good options data. This one happened to have it, and here's the actual email that went out on 8/15. So there was a stock trade. So here's your long, here's your entry, here's your stop loss. Profit target 1, profit target 2. Here's the option trade. Buy the long call, September expiration, select the $5 strike. Your limit on the premium is 50 cents. There's your trigger price. There's your stop loss. There's your profit target. If you got this, how many of you know how to fill out and set up the trade? Type into me if you know how to set up the actual trade in your account. Just curious to know. Yeah, so good question. It goes, do we adjust for the gap? So I give you a premium limit. That's an option limit if you want to use it. Now, new, this trade actually triggered both. It triggered the market option order plus the limit order, right at 50 cents. So even at the gap, I caught 50 cents. But that option premium is there if you want to use it. I don't use it. I send it to you. It's a level of security for some people. They want to have a limit on the option. I exclusively trade up the stock move. Okay, but it's there as an option for you. If you don't want to deal with any type of gaps, then you would use the premium limit. Okay, so I'm going to teach you how to set it up. It's as simple as following instructions and basically copy and pasting, because that's what it looks like. Is you're basically, I give you the snapshot, I give you the actual trade ticket, so you can see the exact trade ticket to confirm your ticket matches up. So I don't know a better way to do it other than providing all of that detail. So when it comes into this trade, this is the actual screenshots sent out. So here's the signal. So here's the signal. This is the trade ticket from that setup, all laid out for you. So you can see when I ran it, this is the 15th at 4:46. Set up the trade, sat there until the 16th. So there's the actual trade. So as I set up the stock trade, I'm not going to do an option trade, but the same way I set up the stock trade, same way I set up the option. The difference is I select the option chain. So I'm buying a specific option chain, and then I put the conditions. It's an order condition of the underlying stock. This is the limit of the option plus the stock. All right. Once again, there's lessons on this, but this is an automated process. So once you set it up, this is set up. You can see the time, it's 4:46. I'm in Florida, 4:46 on the 15th. So the next day, it triggered the trade. Triggered the trade at the open. It was like 9:32 or something. So that's the level of detail. So as you learn how I trade, follow the signals, you're able to put it together so that you can build the habitual habit of actually running a systematic approach to trading, finding breakouts, knowing when extensions are happening, when they're not happening. Exactly. Robert is one of our clients. He goes, new is currently at 50% retracement, waiting for a high volume entry bar, right? So this is why I use profit targets, because look what happens after the profit target. It pulls back. That means we got a good profit target. Hits it, comes back. So as Robert just said, he says, time to jump back in. Yeah, I got a question on how to set up the option trade. Yeah, we'll get you out lessons on it. It's literally the same method as I did on the stock, except you select the option chain. So we'll send you out, you'll have all the lessons, and we go through it multiple times as often as needed so you can understand how it works. But that's what these moves are. And so when it comes down to good example again of these profit targets. So here is a stock setup. This is utilizing multiple profit targets. And this was a similar type of process of setting up a trade. This is on Asana. So you guys will see this volume spike crossing over. This is a signal we sent on the 3rd. Profit target 1, profit target 2. So this is how the method of money management goes. All right, so we've got a predefined profit target. All it needs to happen is you got to hit 23.24. Next day, triggers the trade. We're live. See a strong volume, bang, profit target. Okay, that was just a short 1, 2, 3 days stock trade. Almost 20% on a stock trade in just 3 days. That's a breakout. Now, once you hit profit target 1, half your profit's off. Your stop loss, you move it to break even. So how much can I lose now? I've locked in half. I've got my stop loss at break even. How much can I lose? Anybody know? 0, right? 0, because I've already locked in half my position at profit. My other half's at break even. And so if the market does as it does here, can't get above, and comes back, stops out, we made our money. Okay, that is called guaranteeing a profit. It's a guaranteed profit money management strategy. Now, it's not a guaranteed profit at the start. It's only guaranteed when we hit the first target. But ultimately, the goal is to let our money work, realize profit, then protect our balance. This is a 50-50 model. There's multiple ways to skin it. This is the most straightforward to start off with, is a 50-50 model. So equity management is wildly important. This is automated. Once that goes off, we then set up the other trade. Second profit targets here, stop loss even, trade protected. This happened to pull back, take us out. But we guaranteed a profit. We made money on the trade. That's the power of what I teach in the money management side, is diversity, is being able to understand exactly how to structure trades, how to find momentum, when to trade, when not to trade, okay? A lot of what we see on the big moves today is we're waiting to see what comes out with all the data coming out this week. There's a lot of fundamental economic data, so you're seeing a lot of tightening. There's expansion in energy, right? There's areas that are moving. So the method is consistent, from high level analysis, like on the S&P, diving into different exchange traded funds as we do, dropping down and looking at individual stocks, individual industries, deploying strategies of when to buy the stock, when to not trade the option, or when do you trade both? When's the time to trade covered calls? It's a widely successful way to trade in particular conditions. When is it best to go out of the money versus be in the money on option trading, right? There's a whole world ahead of us as far as strategy. My goal is to be able to deliver to you timely, relevant data in the form of signals and education to bolster your knowledge depth, to give you skill sets to simplify your financial trading. I've got traders that take this and use this intraday. I've got traders that use this for their 401k, when to time in and to increase their retirement account investing, when they start staying in cash as the investment markets, the different IRAs and funds start to pull back. Because if you can chart it, you can forecast it with the method I've shared with you. And it's only been about an hour and 40 minutes of actually going through, maybe an hour and a half of actually going through the actual tools. And there's a whole world ahead of us. I didn't even talk about my favorite tool, because there's not enough time, is the retracement side of knowing when the retracements are, where they are, and then how to actually time the next entry point. So ultimately, if this method, how many of you can understand what I've gone through so far? Is it clicking? Have you learned something or refined a method that you're currently using? How many of this has been of value to you as far as the method of how I break down the market? Type in a yes or type in a me. I'm just curious to see if it's making sense, because that was my promise, is I've got to help at least give one or two different techniques or tool sets that maybe you haven't used, or maybe you've heard of, but you never quite knew how to put it together. And I get it. Many of you are wanting more and more and more, and I wish I had all the time in the world, but there's only so much time in an event like this, all right? And so I really, truly want the honesty. I want to understand if this is making sense, because if you can grasp the concept I talked about today, this is the tip of the iceberg. Having a method, having a modeling concept is powerful. You know, I've got questions on what's the screener. Well, once again, that's another probably 30 minutes, 45 minutes, an hour to walk you through the different ways to find these trades. You know, so I only have so much time here. My goal was to walk you through the most fundamental and basic, and I think powerful approach to actually looking at the charts through a certain lens, seeing the relationship between the volume, where the market extends, where it pulls back, looking at it vertically. If you want more, you can get more. Sign up for the Rapid Profits method. It is signals, support, live webinars like this. I do it every week. Plus, it's also all of my trading strategies, momentum breakout techniques, my empowerment toolbox given to you. You're going to see everything that I talked about today in 10x type detail of what I'm able to do in this event. All right, and it's an amazing opportunity. I've got, I think it's amazing. You're going to look at the price and go, they are crazy, and we probably half are crazy, but that's what makes it fun. So that price you're going to see here in just a few seconds is extremely affordable. It's on purpose. It's not a typo. We believe in the mass approach, meaning I'm going to offer you an extremely low price for the value you're going to get. All I ask is that you tell at least 3 people. Once you find the level of success you're looking for, tell 3 people. I don't care if they're strangers, family members, maybe it's your golf buddies. Tell someone and give us a chance to help them too, because that's how we're able to offer the special pricing that we do, is because of the numbers, right? Volume. So I get it. You're gonna say, well, what's the type of guarantee? How much money do I make? Okay, I'm just able to show you a few examples of what we've done in the last week and a half. Okay. If you're not satisfied, let us know. You've got 30 days. It's a clock, 30 days, no criteria. Between you and I would appreciate a gentleman's or gentlewoman's agreement. If you sign up, come see me in at least 3 of my live sessions. Come join me live. I do it Monday nights and Thursday at lunch. Come to 3 within that first month. If you do that, if you trade at least 1 trade that I send you, and you're not satisfied, then our agreement will hold. I'll give you 100% of your money back. Now, that's our agreement. Our company has an agreement. It's what you see. It's black and white. But I would appreciate that if you start, give me at least 3 sessions. Give me at least 3, because I'm going to forecast the next couple of days. You're going to come into the next event. You're going to see if my forecast aligns with what happened. Then you go, man, maybe he's not that good, or maybe he's too good. So then I do it again, and then you come to the next session. You go like, you know what, Matt does know what he's talking about. This strategy makes sense. I'm going to stick with you, because that's how on par and in tune we are with the financial markets, and empower you. So that's all I ask. Though on black and white paper, there's no criteria. I would hope that, based on sticking with me so far, if you show up, let me show this to you. I can't help you if you don't show up, right? That's just my side agreement with you. Now, this program, I'm going to go into the details, but the high level is simple. Sunday, Tuesday, Thursday, I send you signals. It could be option signals, could be stock signals, it could be multiple options, could be multiple stocks, it could be options, could be stocks. Okay, it depends on what we come up with. I'm going to send it to you Sundays. I'm going to send it to you Tuesdays. I'm going to send it to you Thursdays. You're also going to receive text messages. Okay, so you're going to get text message alerts. It tells you exactly what to do. I'll show you what it looks like on my phone. This was a signal I sent out for Pepsi last night. See if you can get it zoomed in there. So there is Pepsi, exact signal that went out yesterday. So can you follow those signals, right? Everything comes out at the point of signal. It comes out between 7 o'clock at night and 9 o'clock. So you have all the way until 9:30 the next morning to set it up. You have 12 hours plus to set it up. You're going to have actually the tracker. I showed you what it looks like. You've got every single stock, every single option trade. It has the entries, profit targets, stop losses. If it's an option trade, you got the option premium. And then you got the screenshots of the tickets. Everything's online in our cloud tracker. I'm also going to give you, this is where it gets crazy on our side. I'm going to give you access to my Market Pro Live Club. This is a twice a week live trading session, Monday nights at 7 p.m. Eastern, Thursdays at 12. They're about 2 hours, sometimes 2.5, depending upon what we come up with, what kind of topics we're up against. All right, so 2 to 2.5 hours a session. So that's 2 sessions. That's about 4 to 5 hours a week, sometimes 5 to 6, but we'll say that on the low end. For the entire year, I'm going to give you 12 months access to go along with 12 months of the rapid profit method. As long as you're an active subscriber and you bill again in 12 months, you can keep seeing me. Okay, so that's the combination of giving you fish, teaching you to fish, and then coaching you how to fish it. Okay, that's what this is. The second bonus I want to give you, because you have questions, I've already seen them, I just don't have time to answer them, is you're asking specific questions about the strategy, the momentum breakout strategy. So I've got what I call is the empowerment toolbox, which is about 10 to 10 and a half hours of pre-recorded lessons on how to use the moving averages, how to actually deploy and how to fine tune volume, how to put together your trading view charts, how to put together stock screeners, everything about the strategy. I'm going to give it to you. It's a program we've sold for $1,400. So I'm going to give it to you. It helps everybody if you have the exact roadmap. So I've learned, I'm going to provide it to you. Like I said, as long as you refer at least 2 people, just let them know about us. When you find success, pass the word along. That would be a huge help for us. The third bonus is a lot of you may not understand how to trade options. You may have a high level knowledge. I prefer you to have an intimate knowledge of the different strategies we deploy on option tradings. Could be long calls, long puts, in the money, out of the money, at the money, covered calls we use as well. So I want to make sure you've got a good base of knowledge there. So I'm going to give you the Options Master Academy. And then I'm also, once again, going to walk you through and give you our module for money management, managing your profits in the option, as well as how to utilize your money management in trading stocks. Okay, so it's really the same concept, but specific to the method of trading, right? So I'm going to give you those. You have the guarantee. This program, you add up the bonuses, you add up the services against what we've offered in the past, you can total it up. For this event, in fact, the first 10, before I write this down, before I show this, I want you to get your pen and paper ready because you got to write down this code. This goes fast. For the entire year, there's no hidden fees. For the entire year, everything on the screen before you now, you can have for $299 per year. Everything here, less than $300 for the entire year, 12 months of this. All the live training, all the signals, everything listed out for you. To sign up, you need to go to Rapid Profits, plural, S, rapidprofitsmethod.com. Go there and sign up. Before you go, don't go yet. Get your pen and paper and write down this code. For the first 10, there's only 10 of these. The first 10, write down this code, MATT, capital M, M-A-T-T, 100. It's right there in the bottom right-hand corner, MATT 100. The first 10 will save $100. You better go right now. But the only first 10, it's automatically set up. We can't do anything about it. So you have $100 online, on the line right now. Go to the checkout page. It's $299. You type in MATT 100. The first 10 will see $100 taken off. It's only available right now. Many of you may go, I want to replay. That's fine. You can sign up. It won't be $100 off. This 10 is going to go. It may be on the way out already. I'm going to get word here. All right, so it looks like they're coming in. So remember, you write it down, MATT 100. I'm going to go through the details in a second so you know exactly what each one of these mean in more detail. But what I've shared with you so far, these bonuses is gravy. This on the left here, the method, the coaching, the signals handed to you is worth all of this and way more, as you know, right? So first 10, lock it in, $199 per year. All right, so write it down because after this 10, don't worry if you're not fast enough, okay? I'm getting word here. We've got 4. All right, so usually takes a few minutes. Some of you are longer than others. All right, so keep going because the rest of you, you're not going to miss out. $299 for the entire year. Write down MATT, M-A-T-T, 50. So you can save $50, okay? So once this is gone, the first 10, looks like we're almost there. The first 10 are gone. You can sign up and save $50. So $299 For the next 10, it'll be 249 for the whole year. As long as you're active, I get this question a lot. As long as you're actively billing, meaning you don't cancel or you don't decline and then have to restart anew, you'll lock in this price. I can guarantee you this price will not be here next year. So to lock it in, make sure you're billing and you don't miss the billing so you can lock it in. Okay, but as long as you're active and billing, you'll be fine. You'll lock in this price. All right. So go to rapidprofitsmethod.com. I'm going to type it in for you so you have it. There's a few more spots left, it looks like now. Let me type in the URL so you can click it. So you can just click this link and go right to it. There you go. Nice, SP got in, Heine got in. Appreciate it, Shova. It says your service is highly valuable and have already passed your info. Yeah, appreciate it. Thank you, Robert. Great comment in there. Yeah, Heine, you got a great question. Does the screener work on Thinkorswim? It does. Yeah, it does. Yeah. All right, so 2 more. Now remember, folks, I'm going to go through each one of these steps into detail, all the bonuses. Okay, so don't worry about that. But I want you to put yourself in the mind of an opportunistic trader, right? Remember what we saw on the charts. So on the charts, saw the volume spike, big green bar, at a reversal point. What do? We take action, right? You got to be action based. Even the method that I teach you of sitting on top requires you to pull the trigger, right? 199, there's only, I don't know if there's even more left. Let me see. Okay, it looks like there's, I don't know. Looks there, you know, when I see 2 left, it's like, you know, you're on the page. So let's just use the $299 per year. What's your average trading size now? Are you trading $500 a trade? Let's just take $500 a trade. So on one signal last week, $500 a trade times 96% profit is $480. $299, let's say you get in this program for. Did you make your money? 1 trade? That's why this price is down here. I intentionally forced the team to keep these prices lower. So I'm not having you focused on having to overcome and having to cover $3,000 in education. Some of you paid more than that already. I know. I was on the side. You may have purchased a few of my products back 5, 6, 7, 8 years ago. So ultimately, this is about return on investment. By keeping this price down, by leveraging the masses that I work with, lowers that anxiety again, right? I know what's available in the market. I know many of the top traders. I have close relationships with many of them still to this day. And I know similar programs they charge for what I offer. Obviously, I think mine's better, but ultimately, I believe that everyone has the right to select who they want to coach. And there's programs that are $2,000, $3,000, $4,000, and they don't get even half of what I'm sharing with you. Half, right? So I know it sounds crazy, this price, but it's intentional. It's not crazy to me. It's not crazy to my traders. This is an opportunity to get in now and reframe the future mindset that you have in the financial markets. Even if you're not even trading yet, many of you maybe on the sidelines. No better place to learn than when you have freedom from anxiety. This is the time to learn. If you want more time, if 30 isn't enough, let me know, okay? I'm not focused on time. Focus on developing, empowering, and giving opportunities to succeed. That's my goal. So if $199, $299, $1,000, $2,000 is something you can't pull the trigger on, I get it. But if you have the money and you're just not confident, what's the worst that's going to happen, right? You're going to be in the same situation you were several weeks ago, a month ago, 2 months from now, 6 months from now, right? What's the worst that's going to happen? I think I'm enjoyable to work with. A lot of clients say so. You're stuck around long enough, you might as well just pull the trigger and have some fun with us. The worst case, you're going to learn something. Best case, you find a repeatable model that really changes the tone for your current trajectory. The way I see it, if you're here, there's something you're looking for, or you wouldn't be here. Not this long. I intentionally go long and I teach and I teach and I teach in these events versus what a lot of other people do, because I am willing to put everything I know up front with you. I'm not going to hide anything. I'm not going to say, oh, you're going to learn that later. You know, outside of time, there's only so much I can do with, but I try to lay everything out there. I like to put all the cards out, and you can be the best decision if it's going to work for you. But you will never know until you know. Okay. So at this stage, the MAT 50, I think there's still a couple of those. The 10 or the MAT 100s off the board. I know that. The MAT 50 though is probably one or two left. Based on how long people are taking, it may be in the process already. But ultimately, no worries. You'll have an opportunity to work with us later. Just to recap, this is what you're going to receive: signals as well as learning. Okay. I'm going to make sure you've got a quick start options training program so you understand how to read option chains, all the good stuff. Okay. I'm going to give that to you. Don't forget, this is one of those first bonuses I talked about. I want to make sure that you understand how to actually set up and trade the method I'm going to give to you. Autopilot, setting up the trades, entries, exits, contingent orders, right? You've just got to understand the buttons to push. This is where I go through the buttons, right? So you understand how to set them up, how to follow along. You're gonna have access to all the checklists. I showed you a couple of them. I've got more. You're gonna have all the 4 that I go over all the time. You're gonna have all of those checklists with you, so don't worry about that. Everything's laid out once again, nothing hidden, nothing behind the scenes. Money management, crucial lesson, of course. I talked about that a lot today. You're going to have a module specifically for that. Now, this agenda here that you see, this is for the momentum breakout strategy. It's 10.5 hours. This is where I break down the method I used today. So how to read the indicators, how to use volume, how to read it, how to set up entries. I had a lot of questions about entries. So you're going to learn how to set up entries, profit targets, stop losses, how to select the best option chain, and how to put the checklist all together. This by itself, we've sold, and we have many traders that have just purchased this program on just pure education. I'm including this for this event. It says sold this for $1,500 as well as $2,000, just this by itself. But this is the in-depth breakdown. This is the Market Pro Live Club. This is our live support. So Monday nights at 7, Thursdays at 12. You're with me live. Can't make them live, don't worry, watch the archive. Got 70 videos all the way back to 2021 in the archive. You want to go watch what happens on major events, pull up the video and see how we called it. But you have access to the live as well as archive. And so remember, if you're the first 10, obviously you already locked it in, those are off the board. The next wave of you, I believe there's still opportunities. There's still a few opportunities for the $50 off. As stated, $299 is worth every penny. This could easily be several $1,000s, easily. I don't have an army. I don't want an army. I don't want you to have to pay for this huge marketing company. We don't need it. We partner with third parties. They know me. They know what I produce. They put us on their webinar schedule. I do that through many companies throughout this space. So we keep nimble, and that way we can offer you fantastic pricing that you really scratch your head and go, is it really that price? This is truly everything you see here. There's no hidden fees. There's nothing. If you want more, we have others. But for this program and all the details I've given to you, this is everything for $299 for the entire year. Like I said, as long as you're active, you'll continue with all the other bonuses. They don't go away. All right. So if there's questions on the program, let me know. What day is it today? Today's Tuesday. So I've got to run because I've got to get the trades set up for tomorrow out. So if you're signing up, great timing. You're going to be in here in an hour or so. You'll get your very first signal from us here and from me following the rapid profit method. So I haven't gone through it yet. Could be a stock trade, could be option trade, could be stocks and an option trade. Depends on what is set up. I have a sense it's going to be energy related based on what I saw on energy today, but we'll have to see on the charts. I got you, Ray. Yeah, no worries, Hani. I know you're registered. Yeah, we'll have a replay out. I just want to make sure you've got, perfect, you got the email, you got the receipt, perfect. If you have a question, so you try to subscribe, didn't go through, give me your email. All we see is trader. So type in your email there. I'll get my team that's monitoring to help. SMS is every signal. So if you're not, I have Alan here helping me with the event. So if you're not getting SMS, you've got to opt into SMS. So what we'll do, and what I'll do, is I'll make sure the team includes an opt-in to the SMS. You have to do it yourself, you know. So I'll send out the signal. On the signal, make sure you check your email. It'll be an opt-in for the SMS. All right, William, perfect. I see you. Yeah, so I've got several people helping facilitate the questions. You got it, honey. No worries. Yep, Robert. Appreciate the comment. Yep, everyone is very welcome. Yeah, so we'll have the event out. Yeah, we'll get the recording out. That 100 off is literally 10. So that will not be there again. So it's exciting. I appreciate, you know, I thought 299 was awesome. The team says, hey, why don't we do this? We know what's going on. Just try to help offset some of the people's costs that can jump in. I said, okay, but let's not try to do 100 people. So they came up with 10. So I thought it was fun. But ultimately, all the benefits, all the value, nothing changes based on what price you got into. So it's just an extra bonus for those that are action based. You know, you got a little bonus in there. Aries, have you received? Yeah, you should be receiving every email in there. All right, Michelle, I see your comment. We'll see what we can do. I have it flagged. Aries, have you not received a single email? It should come from me, Matt@ConcordiaFinancialExchange.com. I know your name, so you must be on the list, but I'll double check. But search Matt@Concordia in your email, it should be there. Looking forward to it, Enrique. Pleasure to have you. All right, so Alan's helping too, so appreciate you, buddy. So if you get a note from Alan, he works with, you know, we work together, so don't be caught off guard. He's an organizer here. Yep, Tao, I recognize you. Jumping in the learning curve. Yeah, it's been amazing. Just the learning opportunities. It's just lots of various price action movements in a short window allows for lots of teaching too. Yeah, we've got a lot more for you, Tao. So always looking forward to working with you. I know you're new. Thank you, Pedro. Glad to have you as well. So you should all have a receipt. Okay, so make sure you have a receipt. It should be here. It only takes a few minutes, so you should have a receipt. And then look for an email that says, welcome to Rapid Profit Method. It'll have your login details. So you're gonna receive login instructions to the membership site. So the membership site has access to the trade tracker, the lessons of setting up trades. So the Market Pro Live Club, the Empowerment Toolbox, the Options Mastery Academy, all of that is in a online membership site. So that's all done automatically, but you've got to register. So you'll get an email, you'll set your password. So make sure you do that. And then you'll also be registered for the Market Pro Live Club through GoToWebinar. All right, so you'll have membership access with all the different tools that you see, and then you'll have your webinar access, so the classes that I host. So just be on the lookout for that. I see you there. All I see is Active Trader as your name, so I don't have a first name. It says, yo, Matt. Yep. Yeah, I'm still here. So if there's any other questions, I'm going to leave this open. So as you can see, I've got some of you have already been contacted by my partner, Alan. So he's here, business partner, helping to facilitate this with us. So I'm going to leave this open just so if you have questions or maybe you can't find the email, just type it in here. I'm going to leave it open, but I'm going to cut out personally and just watch any chats. It's hot in Florida and I'm got this light on me. I didn't imagine going 2 hours and 15, usually 2 hours, but not 2:15. So I've got to get ready for the signals out tonight. So I'm going to jump on that. If there's any questions, you could type it in here. But if you've got your receipt, if you've got your log in the membership site, everything else just follow north to south in your membership site. And then know that Thursday at 12, we've got our next upcoming Market Pro Live Club session. So I'd recommend you go into your membership site, go down into the Market Pro Live Club area, go to the archive, watch last night's first 45 minutes of the Market Pro Live session, and you'll see exactly how we called it for today. We're calling it for tomorrow, and that way you're prepared for Thursday. It's about, all you have to do is watch 45 minutes of it. But go to Monday night's 8:22 Market Pro Live Club session in the archive. It'll get you a good head start to what to expect. All right, so William says it's in his spam. All right, so yeah, if you're not getting emails, check your spam. Unfortunately, we can't control what goes to spam or not. It's amazing what email providers do. Your Yahoos, your Gmails, your AOLs, they just put it wherever they want to put it. Sometimes they don't even deliver it. I don't know if you knew that. Sometimes they don't even send it. You don't even know. But yeah, that's unfortunate. So make sure you add us as a safe sender, matt@concordiafinancialexchange.com. And that way we can make sure you get the emails. Let's see, Mark. Oh, Midland, Texas. Yeah, I went to high school in Abilene, Texas. Abilene. If you use Tasty Trade, you can do everything that I do. So don't worry about, it's just different, buttons to push. But I've got many traders that use Tasty Trade. Nothing wrong with them. I mean, they're fantastic. It's just not going to look like mine. So same buttons, same type of thought process. They do conditional orders like I do. I've got tons of clients that use them. So in class, if there's any issues, just ask me, and then I'll ask the room. So, and then I always have people that are, that have knowledge more than I do in a specific platform. So we're here to help. Yeah, I actually spent about 20 years of my life in Texas. My father was in the Air Force. So we're at Lackland Air Force Base when it was Lackland for about 4 or 5 years, and then came back again after a stint in Hawaii for 4 years, aloha, and then ended up at Dyess Air Force Base, which is in Abilene, of course. And then I went to college in Texas. So spent a long time in Texas. I don't have my favorite coaster. You can probably guess what it says. It says, "Don't mess with Texas." So glad to have you with us. So we'll be able to facilitate all that, Mark. And the same definitions, order types, once again, is the same. It's just different, look and feel, but it can all do it. So we'll make sure you have all that information. But glad to have you as well. All right, perfect. So once again, I've got to jump out of here, but I'll leave this open. So if anything comes up, all you have to do is know that you should have a receipt and you should have your welcome email. If you have those two, you're free to go. And that way, you don't have to stick around here. Okay, so that's all you're looking for. If there's an issue on the email, you don't see it, go to your spam. If you can't see it there, let us know here and we'll make sure our team gets it out to you. Areas, I'll put it up here for you. I'll send it to you, buddy, so you have it. It's just long. I'll write it back to you so you have my email. All right. There you go, Aries. All right, perfect. So appreciate you all. I'm going to go in and make sure I've got all the signals set up so I can go out tonight. And then I'll be back with you live on Thursday, 12 p.m. Once again, I highly recommend go watch, for those signing up, go to Monday's class last night. You can't miss it. Go to Market Pro Live Club. It'll be a tab. It'll be a card. Click it. It'll take you to the archive. And then look for the latest upload. Okay? And that will really help increase your take rate of what and how we analyze the market. So appreciate it. Looking forward to working with you. Got many of you that I have yet to meet and I'm excited to meet new folks. Like I said, make sure you come in and join us in those live sessions that I know will continue this process. So thank you all. Happy trading, and I'll see you in our next event.